Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you, of course, each and every Monday evening to talk markets. Sometimes we do get people watching these on YouTube. If you don't know who I am, I'm Carl Cabalingua. I work for a company called Live Wire Markets Market Index, but I do these as a goodwill gesture, legacy gesture to a group that was attached to a previous employment of mine. And hey, we just get together Monday nights, have a little bit of fun looking at some charts. It is very similar in its format to my Wednesday sessions that I officially do for Live Wire Markets and Market Index, otherwise known as Chart Watch. Let us, before we get stuck into tonight's gear, talk about the disclaimer, which says that everything we're going to discuss is general in nature, has not taken into account personal financial circumstances, objectives, or particular needs. So before acting upon any of that general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading and investing is risky. At some stage, you will lose money. There's absolutely no doubt about it. And really, it comes down to how well you deal with those losses that defines whether you are ultimately successful. Ultimately, also, it is you and not I who's responsible for everything that you choose to do, not me. It's your money. Let us, with that in mind, head over to the AMI broker screen and kick off with our portfolio management model. Not Live 360, it's just the default one that comes up. It's first on the list, I guess. Nasdaq Composite. What's happening in the US of A in terms of how much we can fill our portfolio risk buckets. Imagine your portfolio risk, or how much capital you can invest. Let's say you've got 100 grand ready to go to trade. How much of that can you put in the market, portfolio level? Got nothing to do with individual trade setups. And for example, I'm at 50% at the moment, which is ultra conservative. 50-50 bet, 50% cash, sitting there, earning interest, 2-3% per annum if it's lazy. I've got some money earning 4 point something or other percent at the moment, which is better than what the market's doing right now, certainly in the USA. Not a huge dividend yield over there anyway, but ultimately it's going sideways. And not only is your capital protected, if the market does drop 10%, effectively you've just got 10% extra buying power plus whatever you can earn on your cash. And keep in mind that your average balanced fund can have up to, in a fit, 10% cash, but typically around 5% cash. And if you are investing in passive funds, the old Buffett, buy, hold and hope and pray, you're fully invested. So that is a really, really conservative cash allocation. Conservative capital allocation and conservative cash allocation. Why? Pardon me. Well, we certainly do have a long-term uptrend, so that means we have some risk on the table. I say, Carl, if you're clearly worried about what's happening there on the Nasdaq, why don't you just go to all cash? I'm not that worried. There's a long-term uptrend. Long-term uptrend in bull markets tends to perpetuate itself. It certainly has there for a period of time, but that's just this one. What about the other one? That should put it into perspective. I mean, where are we in that cycle? Are we somewhere around here? Bouncing off the long-term uptrend ribbon, bouncing off the long-term uptrend ribbon. Yeah, eventually you don't. Is that where we are now? I don't know. That's the thing. I can't tell the future, and I don't bother trying. Let's go to the one before that. And I know people are listening on Monday night. I don't need to prove this to them. They already know this stuff. Long-term uptrend ribbon, and then it breaks. Don't muck around with the long-term uptrend ribbon. And I could have, instead of using the word muck starting with the letter M, I could have used a different word that starts with the letter F. But whatever you do, don't do either with the long-term trend ribbon. And that's how effective it is on the way down in terms of impeding upward price action. So sideways trend, that's a long-term trend is up, but otherwise we've got a sideways trend, very choppy price action through here. More recently, lower peaks and lower troughs, predominance of supply-side candles, not demand-side candles, but back, it's mixed. I think, correct me if I'm wrong, I think 50-50 is the perfect place to be right now. I couldn't imagine being anywhere else but having an each-way bet on the Nasdaq Composite. If this long-term uptrend kicks back in again, I'll be glad I've got some risk on the table. I can scale that up really quickly, but if we break that long-term trend ribbon, and I won't go back and show you the dozen times in the recent past where that meant bad things were going to happen. We're 50% cash, and we can scale that down quickly as well and add to our shorts. That's how it works. We haven't picked a single stock, but boy, aren't we glad that this methodology exists. Over here on the old tin pot, thus called, let me show you something. If you don't believe them, some people say, Carl, you're very harsh on the old tin pot. Sorry, you're very harsh on the ASX 200. Why are you so harsh on our beloved Australian benchmark index? Well, first of all, it was called the All Ordinaries Index up until 2000. Literally, we called it ordinary. It was all ordinary. It wasn't just a little bit ordinary. It was all ordinary. And then somebody probably thought, no, look, that is not a great marketing slogan, really, for our benchmark index. Let's call it the S&P ASX 200. But if we look at how it's broken up, and we can see these big rectangles here, right? These big rectangles, that's non-energy minerals, basically resources. And then we've got banks, finance. And look how big these two rectangles are to the rest of the market. Like every other sector, there's 11 major sectors plus the gold subsector. Gold's in here. And that's two, and then you've got the rest. And then within these two major rectangles, look how big the biggest ones are. Like it is so absurd that this thing actually exists in space and time. Hence, much like an old tin pot, it continues to bumble along. Sometimes finding relevance within the global macroeconomic picture. That's when we tend to go up. Otherwise, known as when banks and resources are both going up at the same time. It was the case. We had one day of it here. Boy, that was a good day. Do you remember that day? Banks and resources going up. Apart from that, it hasn't really happened that often. You've got white candles there, but there are days when resources went up. God knows what the banks did. Everything else went down, or vice versa. Maybe the banks went up and resources went down for a day. Picture perfect, isn't it? Do I need to explain to anybody listening what this upward pointing? You're all screaming at me because I'm not on the right screen. But I didn't say anything important. I was just saying this is the one day we had where we actually had banks and resources going up. The rest of them were completely random. But look at that upward pointing shadow and look where it occurred. And I can't make this stuff up. You wouldn't believe it if I told you that markets were this simple. Upward pointing shadow, you know what that means, right into the supply zone. And then what do we get coming out of that? And people are going to put narratives and reasons for all of this stuff happening after the fact, but sometimes it just happens because it's got to happen. 2/3 here. What did I say today? Deep breath, like sigh upon sigh upon sigh, isn't it, for the old tin pot? It's been difficult. I actually thought we were getting a bit of a run on here and getting quite positive, 2/3, and then this happened. We went back to a half, and then this happened, and this happened. We went back to 2/3, and I still think we're at 2/3, but what did I say today? I'm preferring not to add any long side exposure at this point in time, and I don't think you would have gone from a half to 2/3 yet anyway. You just haven't had in fact, I know you haven't had the opportunity because on ChartWatch ASX scans, there was like two things on the watch list as feature charts a few days ago. And, there's a handful today. So I still think we're probably well placed here for risk also. Let us do the whip around the grounds. I'll just go back to the comp because it's worth comparing in this whip around the grounds with the Dow Jones Industrial Average, which we know made a record high not that long ago, above 50,000. The Russell 2000, which was going better, I think, than Nasdaq, but also has had a couple of decent supply side showings there as well. And the S&P 500 I was going to say it was doing better. And again, a couple of candles there. That'll be Wednesday, Thursday, Friday for the mid caps. What about the total return index there? I thought I had equal weight. I don't have it. Doesn't matter. What's the point of all of this? It always concerns me when you don't have this coordinated growth among US indices. And I think some of the more concentrated large cap indices like the Dow Jones Industrial Average have outperformed. And typically that's going to happen when markets are a bit risk off, but they still need to invest. What we're not seeing though is the Russell 2000 matching the comp, right? So what does that mean? So when the Dow Jones beats the comp and the RUT, that tells you that markets are being driven by sort of a risk-off desire to be invested. There's still loads of pension money coming in, still lots of savings. Fund managers have cash, they have to invest it. They also, like me, don't like the risk of not being invested if the market ticks up because it's a bull market. All right, but we're going to see this go up. But what happens when these two don't match up, right? These two. What happens when these two don't match up? That's the point, because it doesn't happen that often. Normally these two are doing the same thing, right? So they usually represent the same area of risk. This is technology related. This is that AI theme. Whatever the narrative you want to put behind it, there's a rotation out of technology and into old economy stocks. Okay, and that's what those two are showing you. What does it mean overall? I don't know. Maybe sideways is best, because there's some decent hitting power in that in those tech stocks, and I will show you some of those when we get to the trading view screen. In the meantime, we're looking for red flags elsewhere, and I'm not finding them there on the French market. In fact, that looks really strong. Do they have really big software stocks listed over there in France? I'm not sure, but looking at that chart, I don't think so, because it looks more like the Dow, doesn't it? Same on the DAX. The Euro Stoxx 50 is fine. FTSE is magic, absolutely brilliant, and Spain's okay. So no red flags there. Hang Seng, let's head to Asia. Okay, looks good. No red flags, no red flags. That's not great. Let's keep an eye on that one. But if we if we counter the red flags to the ones that are fine, there's not all that much to worry about. What about bringing it back to Australia, looking at sectors? Decent bounce today. I have to admit, technology had a decent bounce today. Is that it? Is that the low? No real volume on that. I think there was some short covering today. Was it accompanied by positional buying? Not yet, and maybe that'll come in. But it's way too early for me. No bounce there. I mean, that's terrible. What does that tell you? That is the dead cat bounce right there. Your CSLs, your Cochlears, your ResMeds, which I'm sure none of you own. Giving myself a nice pat on the back there. And same with discretionary, but that was a half decent bounce. Let's have a look at the rest. Energy looked roughly intact. Financials starting to get a bit of mojo back, and that will determine where the Altimpot goes. Gold, okay, so a few warning signs. We're keeping an eye on those. We know what they are. Same with resources. Okay, third little retracement from that old high. Property, neither here nor there, but I would have a negative bias overall based upon the long-term trend. That's doing nothing. That still looks pretty terrible. And that one's 4 stocks anyway. That's not even worth looking at. Let us quickly do base metals while we're here. We'll go to line charts. And this might explain maybe some of that relative weakness on the resources sector. Aluminium, copper, nickel, a little bit of doubt creeping in here. Lead, tin, and zinc really is probably one of the few there where the short-term trends are still intact, with the others looking like they're about to roll. And lithium carbonate is closed today. It's going to be closed for all of this week and part of next week. But a fascinating rebound. And we'll get rid of that last one and that last one and that last one there, just to show that last candle. That's a credible rebound between that candle and that candle. I get it, there's no volume, but that could be holiday related. So interesting. Will we get that second major point of supply coming in beneath the last one, or do we do something special? I don't know, jury's out. I don't know where that's going next. I'd be happy with 50-50 on that one, or maybe a 1/3 risk position overall. Again, we're not looking at stocks, we're just looking at bigger picture stuff and just having a look at that spodumene price. We'll go back to the line chart. Reasonably healthy, back to the short-term uptrend. Let's head over to here and talk about the Dow Jones 30, which is here. I just wanted to talk about this idea of all the bigger stocks, but not all of these bigger stocks are created equal. So you have a look at something like Apple, pretty tough Thursday, Friday there. Otherwise, it was going all right. AMZN, I just want to get through the 30 and just show you a picture of where the strength is and where the strength isn't. Amazon, broken its long-term trend. American Express, coming off. Boeing, not too bad, neutral. Caterpillar, that's your Dow move right there, isn't it? Salesforce, software stock. Cisco, hardware, was going well. You can see Thursday, Friday. So Thursday, Friday is a bit of a switch for many of these. Chevron, energy stock. Disney, rolling. Getting some of the financials. Goldman Sachs, Home Depot, not too bad. Honeywell looks great. So again, even within that Dow 30, it's a pretty narrow group of stocks. We're saying that the fact that Dow's going up it's narrow, but then even inside the Dow, it's narrow again. Johnson & Johnson looks amazing. Some of those financials, big financials, starting to roll a bit. Coca-Cola, McDonald's, those almost consumer staples, you'd call them. 3M, Merck, very strong. Microsoft has rolled over. Nike, consumer stock. NVIDIA, the invincible NVIDIA, flat at best. Not good, not bad, but definitely worth being alert on for a trend change. Procter & Gamble may be coming back up. That one's not doing anything. Travelers Group, another big financial services company. United Health, looks a bit like CSL, if anything. Verizon rolling, Visa. Verizon's the next one. And Walmart. So what was there? Maybe 6 to 10 stocks that actually looked like the index. Let us head over and finish this whip around the grounds by having a look at some of the precious metals now. Silver, I've called a cycle high on that. I can't see anything to convince me that I'm wrong at this stage. I think it's doing, is it fair to say it's just doing everything you would expect to do after that species ending candle. There are no surprises in that one at all. Gold surprised me a little bit because whilst that species ending candle probably isn't one, it's not that bad. It's come back reasonably well, but it's still struggling. I mean, this may well be it, and I think we need a bit more confirmation on that, whereas I think we're pretty confirmed on silver. High-grade copper, starting to roll a little bit. Iron ore has rolled, and we've seen some decent pullbacks, but the stock prices, they've all rolled already. Champion Iron has rolled hard already, ages ago. Fortescue has rolled. Rio and BHP have kept going. They are part of a global trade. So less impacted, but they did get hit today. Uranium, let's go to a line chart on this one. It's okay, neither here nor there, but this is starting to feel a little bit toppish as well. And Brent crude oil. We'll look at coal as well. Neither here nor there, not terrible. Certainly not reflecting what Chevron's doing. And thermal coal actually, that's right, thermal coal actually ticking up. That's interesting. I mean, this is the first time it's been up there for a very long time. Over a year. Coking coal is pulling back. Going to finish with a quick look at the bond market because this is the price of money, and we're seeing a little bit of a pullback here, which should help the Australian share market. I mean, this has hindered it. That should help it. It's not really coming through. Again, that should help, but not feeling it. Having a look at the US bonds, because these are the most interesting. If this was a chart, what would we be doing? We'd be going short like crazy, risk off the table. What we're actually seeing is with yields falling, it means bond prices are rising. So money is moving into bonds. Generally, if money's moving into bonds, that can make it a little bit harder for stocks to go up. If money's moving into bonds, yields are coming down. Yields are coming down because we're expecting the Fed to cut rates. We had quite a benign inflation print. Is the US economy strong? That's the other thing to consider. Actually, generally the data's been pretty good. Last labour report was quite strong. So I don't think this is a harbinger of bad things to come. If the US economy was going down the toilet and it looked like that, I'd be more concerned. Interestingly, some of the longer yields have also come down, which means bond prices are rallying. It should have happened a long time ago. Like, there shouldn't have been such a disconnect between the 10s, the 30s and the 2s. And the reason for that disconnect is de-dollarisation, because it's the 10s and to a lesser extent the 30s that are held as risk-free security on central bank balance sheets. And they've been selling that to buy bonds from elsewhere around the world, potentially in Japan, potentially in Europe, potentially here in Australia. And we're seeing these now roll over because if we have a look at some of these inflation predictors, we've seen a bit of a breakdown there as well. So that's inflation expectations coming down. The bottom line is, if you haven't understood a word I've said, I don't think these are harbingers of doom. If anything, they should support higher equity prices, okay? Because I don't think the US economy's falling into the toilet just yet. As far as I can tell, if somebody's got that smoking gun, let me know. I think inflation's got getting better, and that's helping that. But we'll see. Let us go to your requests for tonight. I've got a couple of offline requests, and we're going to start off with Mick, who's got 4DX over here. 4DX, yeah, interesting chart. I certainly looked at it for a while tonight, considering whether I would put it in the watch list for a plus R. I decided against it by the end. We drew this ages ago, I guess. We said ZRP, we said we'll watch to see if it does something like that at the long-term uptrend ribbon. It hasn't done it, to be fair, but the shape of it is not dissimilar to what's happened. It just didn't get all the way down to the long-term uptrend ribbon. But if we draw in the actual price action, I think we'll see that there is a little bit of higher peaks going on. We don't have a high trough yet because that last trough is still lower. But should we get, all we need tomorrow is a high high and a high low, and then it will happen. And then effectively what this will mean is that this becomes an MPOS. Okay, I'm going to change that in a second. MPOS. Of course, that's not a point of supply, that's a point of demand. Typo from me. And that would be a good thing. Back to rising peaks and rising troughs. We've got a decent whack of candles in here. The short-term trend ribbon, it's trying to support the price again. We don't have confirmation. Tomorrow, if we saw a candle like this, Mick, I think it's on the right track. And it would just depend on what else I find on the day as to whether it would, be a plus R. But a candle that looked like that, yeah, I could have just a nibble on it. So, if then plus R, happy to. We just need some confirmation. That's all. High, high, higher, low confirms this as a point of demand. That one will just be a regular point of demand, but it will also confirm this as a major point of demand. Short-term uptrend ribbon. It's going to look okay. Will that be, and I reiterate, will that be the best setup on the day for plus R, given the portfolio management, et cetera, I don't know, so I can't tell you what the setups will be for tomorrow. I wish I could. If we were to get that candle, then it would create this point of demand as our first point to potentially reduce our risk. That would help us work out our position sizing as well. And, certainly we'd be well out of it on a close beneath there, just to plan the trade, help plan the trade. Okay, let's go to Mick's next one, which is DVP, which Mick was asking about minus R on this one. And I don't think you'd be running at full risk position. I think we've got a little bit of risk off the table. We know that we've got obviously point of supply here, point of supply here. So they're falling peaks and falling troughs, point of demand. This point of supply actually is rising, to be fair. Drawing in the price action. And it is typical, isn't it, of what we're getting right now, which is some crazy price action. Sawtooth patterns, just the absolute choppiness. It has gotten very difficult to trade. Compare that to how it felt through here. And it just felt so easy, didn't it? If only it could stay that way forever, but it can't, and it won't. Minus R. This candle here and this candle here, I think, are really important. I don't think you need to wait for this, Mick. That's my opinion. I think there's too far. Yes, that's the most recent point of demand, but also this candle here, I think this is critical. So if we look at this volatility here, we look at the substantial nature of the volume. I mean, there was some serious demand that kicked in and tried to fight with the supply, the latent supply that's in the system. Now, that latent supply is looking pretty credible, isn't it, based upon this candle here. But if we think about, the buying that came in there, just to a lesser extent here, but I reckon if we start to close beneath it, we've even got today's little bit of a low there. So for me, if I saw something that looked like this, that would be my next minus R event. And, you know, a lot of it is just about visualizing and planning for what we're going to do so that when we see it, we've already decided. So let's go if, yep, same. If we see it, then that's what we do. And if we don't, we get another nice white candle, then we can, you know, persist with the risk that we have, but we've got a pretty tight, stop is the wrong word, but what's the right word? Give back. Pretty tight give back on this one if it doesn't go our way. Order of magnitude, you know, I think we would have had some out already. Not I think, I know. I mean, these candles are not great, but even when we blend them together, they're hard to cause an exit because of the lower shadows. And then that one, and then that's fine, that's fine. This is disturbing here, but even then I'd find it hard to make an open and shut case for minus R. But that's the first candle where I'd seriously be thinking about it. Every other one I'd be kicking myself. So not there, okay, not there kicking myself, not there kicking myself when wondering, geez, I might be in a bit of trouble here. Feeling a bit relieved, but also a bit concerned. Was that upper shadow? Look, a good effort, disappointing. Let's give it another day. No. This is really not working out the way I would have liked. Lower point of supply, blend these two candles together, it's not great. Little bottom shadow, that would give me some doubt. Should I trust the short-term trend ribbon? That would be it here. No, I can't go any further at full risk position. Here I'm just annoyed. I'm annoyed with everything now. I'm annoyed probably getting some out and keeping some in. Here I'm really annoyed. Probably should have kept it all in. And then right now I'm going, actually, after all of that, I made the right decisions. You know, I'm not FRP. I've got some skin in the game, and now I know, as I said, a very tight give back point on the rest of it. And if it went up, fantastic, all happy days. But also, if I'm out of it on this day, on that candle, I'm probably also going, you know what? Screw this. This is too hard. This is not even about P&L. This is about my sanity. This has become too hard basket. So I'm off. Time stop is another way to put it. Very commonly used methodology. That's your two, Mick. Thanks for chipping in. Let's head to the online requests. And Adonis will do yours at the end. US stocks, SLS. This one is for Sudesh, which is looking good, yeah. So I don't recall running this, not to say I haven't, but I don't recall it. Let me check on the liquidity filter. So it's a yes on that day there, that day there, that day there. I don't remember putting it in. Yes, depends on... It's tricky, right? I mean, it's gone 50 cents, $1.20. I'm just checking for any major points of supply out the corner there. Doesn't look like it. That candle there, that one there, those two together, that there. I don't think we'd be running at FRP. Probably running at 2/3. I think that's still the case. I mean, this is actually a lot simpler. I'm just trying to, in my brain, figure out what the probabilities are. But either way, it kind of doesn't matter, the probabilities for it going back up, because close below, it's minus R, and you know, it's probably a couple of minus R's there. In fact, it's probably ZRP because of this. So that in and of itself, not enough. Blend it with that. Now we've got enough volatility. We've certainly got enough volume. We've certainly got the price action. It's hard to justify full risk position on that one. On this day here, given it's only confirming the supply that's come into the system, you could argue you could go another one there. Probably not there. A little bit of a lower shadow. And then today, certainly not. We're just sticking what we've got, and today's candle gives us the benefit of that point of demand and defining very clearly for us a point of no return. So I think that one's actually pretty straightforward. For now, for me, equals R on what I've got. No need to de-risk at this stage, but watching very carefully, because I suspect, given that there was a substantial amount of supply here on that first go round, we're going to see a decent whack of it the next time around. So if I saw like a big upper shadow, black candle, volume volatility, I wouldn't have to wait for confirmation. I'd probably just knock some out just to be safe. If I see a nice big white candle reaching into that zone, no troubles. The supply that I fear is there isn't. Happy days. Let's go to, thanks Sudesh. Let's go to Hayden. Hi Carl, new camera is great and sound is almost is actually better. I have no idea because I didn't change the sound, but that's good. Maybe the microphone looked at the new camera and said, hey, if I don't pick up my game, he's going to replace me as well. Let's go to 4DX. We've done potentially a continuation. So some parameters around that. GMD, which is I'm getting all these tricky charts today. I look at these charts and there's a little bit of me going, oh man, do I really have to analyze this? And it was so much more fun on the way up. I can't tell the future, ladies and gentlemen, but I can tell you that things have changed here. We're not dealing with the same market psychology, so it will get tougher. And my ability to get things right more often than not is probably going to diminish for the next little bit, because the market can't decide what it wants to do. So how the hell can I decide? Let's do the work. Okay, we're seeing a few of these. This is not coincidence. Do we agree? This is not coincidence now. MPOS, clear price action downtrends, probably or arguably less certain price action uptrends. Some that aren't quite there yet. In earlier cases, we're waiting for that extra candle. At least this one has it. To this one's credit, we know that's an MPOS. Here's our little POS here. This is also an M. I keep doing that, don't I? Force of habit. Let me change that. MPOD. MPOD. Pod. There we go. Could I take a nibble? Some decent volatility today. Was it accompanied by demand that's falling over themselves to enter in size and price? Certainly in price. Good move in price. Wasn't really there in size. Didn't see a lot of supply potentially getting in the way, so that's okay. Null result there from the volume. This is the area. How big is it? I don't know. Somewhere in there. Don't know how big it is. I guess there's not much to do on this one until we see what happens in here. I'm an equals R, but am I so desperate to add risk right now that I need to have a crack at this thing? If you get in here, this is your entry, right? This is your potential upside. We surely we all agree. Everybody who's on this call right now agrees that the probability of sailing through that major point of supply like nothing happened. In our experience, we know it's possible. We know in the right sort of market, it's far more likely, but we probably also at our heart of hearts know in a market that's not quite there, like now, it probably won't be that easy. More often than not, it won't be that easy. So if I'm getting in here, my first sort of exit is down there, but to get a little bit beneath the last point of demand, 0.5%, bare minimum, 0.5%, whatever that low is, percentage, 0.5%, 1%, a bit more comfortable, 2% is probably over the top, right? So whatever that low, that trough low is there, plus 1%. That's why I never draw them on the lows, right? So if this is our risk level, and this is our potential reward, we're kind of getting to the point where almost it doesn't matter how good that candle is. I could certainly get to equals R. Please don't make me make a call apart from that. Plus R. I don't know. What do you reckon? Who asked me this one? What do you reckon? What are some of the ones I did find today? And there weren't many. And again, they're ones that the leap of faith ones, do you keep buying that? I'd have some money on that. I think yes, leap of faith, small amount, going into eyes wide open. That one looks a little bit more like compressed, as in not as extended. That's zoom all. I didn't mean to do that. I meant to zoom normal. But it does tell us there's not a lot until we get to sort of 35. This one already a leap of faith, but you can't question the excess demand. This one a bit more closer, well, a bit more compressed, coiled. That one is a gap and run. Like, that's almost compulsory, and I know some people struggle with that idea, but that's massive. That one's a bit more coiled. That one's a bit more coiled. Why did I? Oh, that's a mistake. That should have made the main list, but not the feature list. That's an error there for me. I don't know how that one stuck through. Wasn't meant to. But certainly up to there, I think they were features. The broader list, you could go back to TradingView and you could look at them. Nobody else in the world has that access to that. So what I wanted to do there is just say, well, we've had a few already today, and no disrespect to the questions that have been asked or the people asking them, but I put to you, they're not as clear-cut examples of crisp, clean demand-side control as the ones I just showed you. All right, we've had DVP. Right, I know Mick was asking minus R, specifically minus R, not plus R. And then so far we've had SLS. Again, a little bit less certain. And 40X again, and then GMD. So CU6 for a turnaround play. We're gonna go out of the frying pan and into the fire now. Here we go, CU6. Just when you thought you couldn't make it any harder for me today, we're going to make it harder for Carl. What do we think about this one? Normal. Maybe it's not that hard. I think we're really struggling here, aren't we, to find a reason to add risk on this one. Let's move that over there. Look, I think there's a level there. Correct me if I'm wrong. There's probably a level here as well. And then there's probably even a level down here. And then, we haven't even dealt with the long-term trend ribbon yet. But hey, good candle, good candle. Don't get me wrong, good candle today, good volume. Is it an aggressive setup? Maybe. I'm a pass. Look, the best I can do is say, well, if I had it, and there's no way I can have it, I could go equals R. I don't think I'm plus R on this one. I think I want to find something a bit simpler. That one was from Michael. Michael saying, really appreciate what you're doing here, Carl. Thank you, Michael. No worries. I do enjoy Monday nights. Let's have a look at this one's from David, AMC. Now this is more interesting for a turnaround setup, isn't it? And I have run this, so I'm pretty sure. I don't think I ran it on this day. I wanted to. Or maybe I did. I ran it as aggressive. No, I don't think I did. I tend not to put... It's pretty rare I put an aggressive one in the chart watch list. I'm pretty sure I ran it on that day, and then I'm certain I ran it on that day. Okay, as a turnaround setup, because now it's starting to make a bit more sense. That's more of an intraday dink, isn't it? There's no official move like this yet, but this candle is so good. Is it fair to say we can anticipate that? This is the classic intraday dink. Intraday dink. And then there was an official dink. So it's a yes from me. It's got all the hallmarks of a turnaround setup. The short-term trend is up. And draw that. Short-term trend is up. The long-term trend is not down, which means it's amber or it's dark green. If it's a turnaround setup, it's pretty rare that it's dark green. We have a price action uptrend, so rising peaks and rising troughs. Rising peaks, don't forget what that represents. Let me go to the other tool. When we get towards a peak, right, a peak is a very uncertain level of point of supply. There's a lot of question marks as you come up to it. There's potential for latent supply. But if you can break through that peak, what does it say about the uncertainty among the demand side? What does it say about supply's ability to hold down prices? It says it's very little on supply and very strong on demand. So this is why we want to see that. I mean, we've got supply removal. I think this indicates to us supply removal. I think this indicates to us FOMO among the demand side. They're not fearing this happening. And put it into perspective, how many charts have we looked at today where you and I are fearing that happening, getting back to that big point of supply and fearing that we won't get through it? It's that sort of environment. But if we've got stocks that are breaking through those old points of supply, I think it says a lot. We're not fearing near those points of supply. We're not fearing, I guess, getting less. We're fearing missing out. So that's very positive. And of course, when we are having our rising rising troughs, we're not pulling back as far, right? There's small pullbacks, plenty of demand on tap to soak up. There's always going to be supply around, a little bit of a pullback, and up we go. And that's what we're seeing here. So it is important for my turnaround setup to also have those rising peaks and rising troughs. I won't draw them in, but you know they're there. And the predominance of demand side candles, and certainly between these two candles here, you don't get much more demand side than that. So tick, 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 tick. Therefore, I'm happy with this one. Now, today's candle was still a good one, actually, a little gap and run. I know there's a little bit of an upward shadow, but if we keep the rest of the candle in it, which is what the gap, sort of filling that gap in our mind will do, then it's fine. So plus R for me, no problems. If you are not looking to add risk, then happy to maintain the risk we have. Where could it go? Well, this is, this area here, that has to be an area of concern. We'll cross that bridge when we get there. Will we see, upward pointing shadows, black candles telling us that supply is manifesting, or will we see white candles saying, you know what, they already got out. We're in a different market psychology now on Amcor. So yes, happy with that one. Let's go to, is it just me? Sorry, let me just finish David's comment. Amcor turnaround, where is the best to add risk? I think I've discussed that. In particular, do we wait for the dink and add risk as soon as the peak? Well, I've talked about the intraday dink. And again, go back to chart watch. Keep an eye on those scans, keep an eye on the watch list, because they'll tell you when I'm happy with something, right? And if we're not sure, correct me if I'm wrong, but you all have access to this. I think I've given you access to these as well, haven't I? I've given you access, like you can see exactly what I see. Like, how good's that? I don't think you've got access to the Dow Jones 30. I won't give you access to the Dow Jones 30 because I think you can make that yourself, all right? But I'm pretty sure I've given you access to these ones. And then if we go to uptrends, it'll be in here, and Amcor would have been in that list on exactly that day there, right? Okay, let's go to Hayden, who's saying, is it just me, or is the new camera doesn't like quick flicking on the charts? Oh, okay, yeah, I don't know. You tell me. Yeah, all feedback is welcome. Send me an email or send me some screenshots, even better, in that email to show me what you're seeing. That'd be really helpful. Thank you, Hayden. It's not you, I have the same, says Michael, which makes me even more concerned. So screenshots, please. And it'll be a setting I'm sure that I'll need to fix, or I'll need to go back to the old one. David, 4DX again, significant pullback, ZRP, then small rise and short-term trend ribbon just turned green again. Is now the time to add risk? I think I've answered that 4DX already. Let's go to George, who's got, hi Carl, I'm short CPU. Oh, it's today's candle, a minus R for covering back, and then we'll look at your SOL. So there's a bit of volatility. There's certainly a bit of volume. Good candle, strong candle. Compared to this though, I mean, who are you going to believe? You're going to believe this, right? Or are you going to believe this? I think I'm leaning towards still believing this. We do know we don't want to see a close above the short-term uptrend ribbon. Confirming this, another same sort of candle, that it's really difficult to maintain full risk position. You could hedge your bets. You could do less than a third. Order of magnitude, let's say you shorted 1,000 shares instead of doing 300 shares, 200 shares, 100 shares. I get where you're coming from. I am also, like I said to you before we looked at the XIJ index, sector chart, and I said, looks like a bit of short covering today. That's how it felt to me. A few of the shorts started to say, look, that's probably enough for now. Like, let's just lock some in. No harm, I think, thinking in that way. Do we have a credible signal on screen? Yes, we do. Is it likely? And can you withstand the pain of something like this? Potentially. Absolutely possible. Right? That would be a strong showing. That would certainly cause me to act. What we don't want to do is panic and then end up with something like this. This is the benefit of waiting for a little bit of confirmation. Right. That would be perfect for a short. So just showing you one more candle. Okay, what do we get? Do we get the first one, the white one, unequivocal, manage our risk? Or do we get something like this and we're going to feel a lot more comfortable about it? I don't know what we're going to get. Let's see what happens tomorrow. First and foremost, if you wanted to just knock some off the table, first thing, on the basis of today's candle is done and dusted. It's there, it's real, it's happened. You're justified in acting. But it's a very modest action because we're saying, like, question mark this or this. Which one's more credible, right? And I still think this is more credible. If you feel that way inclined, a bit off here, and then we're waiting for the candle. Big white candle would warrant us doing more. This sort of candle, we're cool like Fonzie, even if we did take a little bit of risk off the table. And it's not ideal. It's frustrating. I mean, when you're going short on these things, hopefully this is not the first one you've done, George. Hopefully you've shorted many others because there have been so many others. Look at PME. And I bet you didn't short PME, George. I know you shorted of all the ones you could have shorted. I know you took CPU. And of course, that's the one that rallied today. Right? And a good little juxtaposition there in terms of a candle that I've said to you, look, it is credible. It's credible to downside showing. Felt like some short covering today. We can see it's only selective here. And then we look at PME and we say, well, some stocks were targeted and others, the funds were happy to just let them swing in the wind. Zero, you know. WiseTech was a big one today. T&E, right? So there were a few. It wasn't just your CPU. But also, yeah, some of them have had a much easier run to get there in the first place. Let's go to SOL, which is your next one. Is this an aggressive short? No, I don't think it's an aggressive short. I don't think it's an aggressive anything. I think it's very sideways. So for me, I just think this would be like banging your head against a brick wall. It's almost the epitome of equilibrium. So it's a pass for me on that one. Where would it start to look more like a short trade? At least for me, it needs to get, because it's so sideways, I need this to do some work. Something like that. And it's gonna start to get my attention. That's how early in this phase it would be. You're on a bit of a mission there for shorts, George. Some of the ones I thought warranted some attention. A4N. Volume, volatility, tried to rally today. So if you think about how many, clearly I reckon there was some short covering here, right? Positional buying, I don't know, but certainly there was substantial demand. Look at the volume. Volume means substantial demand, but then look where we finished. It means substantial supply. So there's still substantial latent supply in the system for this one. And it was motivated too, and that's the difference, right? So on a day where there was short covering, this one was still down. I think that speaks volumes. Ordinate. I mean, that looks horrific. AQZ. And we're comparing these to SOL. Okay. BRN. That one I'd put in the, a bit more of the ho-hum camp. Certainly it's doing everything, but it's very slow and steady. Even Maya. Now, when they get to the small prices, it gets a bit harder. These ones, they tend to be a bit more motive. Telex. $30 stock, $8 stock. Oh, but Carl, surely it's cheap. Treasury Wine Estate looks like it's about to start a new leg. And that one. So all of those I put to you look very, 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 very different from SOL. I'm not saying my picks are better than yours, but I'm just saying my picks unequivocally are showing greater supply side motivation than SOL is at this point in time. DVP looks like one of my drunken zebras. Absolutely. Yeah, there are many drunken zebras out there at the moment, Mark, and herein lies the problem. But think of it this way. That is why I designed the whole portfolio management system. It is designed to protect you from you, because you're going to look at these setups. You go, oh, they look like great setups. Plus R, plus R, plus R, plus R, plus R. Ooh, those look like great shorts. Plus R, plus R, plus R, plus R. You always want to be trading. You always feel like this trade's going to be the best. And when the markets are going gangbusters, when they're strongly trending one way or the other, that's usually the case. Low volatility. When they start to get choppy like this, even the best setups, big white candle, next day big black candle, right? Look great, sawtooth pattern, maybe they go down. That portfolio management model there is grabbing you by the shoulders and it's shaking you, saying, hey, stupid, no more than 50% of your capital in the market right now. It's just too risky. It's too uncertain. The big picture is undecided. Let's go to MAU got a bid by GMD. How about that? So good for MAU. I still think MAU looks very, very impressive. ALK does look very good for a continuation setup, but I definitely put it in tonight's broader list. It didn't make the feature list only because of that upward pointing shadow. And that's it. If not for that upward pointing shadow, it would have made the feature list. It's still extremely strong. It just lost a mark out of 10 for that. So yes, it's still plus R. It was in the main list. So it's 100%. Yep, plus R, no problems, equals R. If you're already on it, you don't want to add risk anywhere else because your portfolio management model. And if you don't believe me, if I go to the browser window, there it is. Top of the pops, ALK. These are all plus Rs in my book. Okay, and you can see there's far more there than the other list. Fuel is interesting. Fuel, that's the BetaShares Global Energy Companies ETF. And we looked earlier, didn't we? We saw that chart of CVX. Interesting to see. Exactly the same. Let us keep moving down the list. We need to finish very soon, so I better pick up the pace. There's a couple of US ones there from Peter. We'll get to those in a second. STK had a good day today. Well, could have been better for a continuation plus R. Look, not for me. Just it didn't make it the list to date because of that upward pointing shadow. There was some supply coming in at the top of today's candle, and I think it's a hangover of this pretty well defined point of supply. What we don't want to see, sorry. That point of supply, that upward pointing shadow, hangover, okay? And thank you for the emojis. That does help me. Otherwise, I would go on for minutes and minutes and minutes. So we're just watching this point of demand, and we don't want to see a close beneath there. It would take us also beneath the short-term trend ribbon. So we're going to go minus R on here, close below. But I cannot find a reason, based upon today's candle, to make me want to go plus R. This candle is not anywhere near as good enough. The rest of it also is a bit flat, isn't it? It's going up, but it's one of those. Remember we talked about those price action trends that are quite overlappy, where there's not a lot of indecision, and it's one of those those blocky sort of candle charts where there's probably a lot of paper out there as well, which can make it a bit hard for it to move at times. Look, not the worst chart we've seen. It's just today's candles for me not warranting plus R. Let's go. Perry's got some US stocks. Haraju's got G50, which we did look at on the basis of it was in the feature chart. Looks fantastic. Certainly, yes, for me. That is going to be plus R every day of the week. Equals R if you've got it. And then we're going to go to TAS, which actually is not ringing a bell. So I'm guessing that has not met my turnover filter. You can see that it has not. Therefore, I haven't seen it. I can say with perfect 2020 hindsight that this is a very nice candle here. That's certainly plus R. Prior to that, I don't think I would have seen it actually. I mean, maybe there. Maybe there. little upward shadow, but yeah, I think that was definitely a strong enough candle. So probably those two are the most obvious ones. Not a plus R today. Again, upward pointing shadow, just keeping me out. Proximity to 10 cents, also playing on my mind, but certainly still equals R for me. That upward pointing shadow is certainly not enough to push me out of any risk at this stage, which is exactly what Haraju is saying. He's also going with equals R on that one. We'll look at your US ones in a second. George is saying he is already short TWE and Telex. Wonderful. But with options and small caps are not possible on some of those other ones. You're quite correct. So that makes me feel a lot better because, I always talk about this idea of this short selling tax. You won't do it. You won't do it. And, you'll see prices come off and you'll go, I should have done it. I know I should get around to it. I've been meaning to open the accounts and learn how to do it. And Carl tells me about it, and I'm seeing all of his ones plummeting down. He's going high. He's high-fiving himself, punching the air, how clever he is for all these stocks that are crashing. And then you finally get around to do it. And I swear to you, it'll be the bottom of that move. Okay, 100%. You just go short. Here I am. I'm at the party. I'm at the short selling party. Short, and boom, that's it. Market rallies, takes off. Ladies and gentlemen, that's what we call the short selling tax. It is compulsory that you do this. Nobody gets away from doing it. Anybody who's shorted knows that this is the case. And it's got to happen to you the first time. But you'll learn a few lessons and you'll have it ready for the next time and the next time and the next time when things are starting to roll and you're catching all of those beautiful ones just as they break below the long-term trend ribbon, rally back up, throwing that big black candle signal, and then down you'll nail those next time. I promise you. Maybe George is in that category as well, but watch out for the short selling tax. Let's go up the list. We're going to head over to the browser window and do these US stocks now. So I won't see anything that comes onto the request list from here. But we've got SND from Haraju, which is SanDisk, SND, so one of these component manufacturers. Oh, is it not? It's Smart Sand. What is SanDisk? SNDK, I think. It's Smart Sand. I definitely got the right one because that chart looks amazing. SNDK is SanDisk, which doesn't look too bad either. But let's go to SNT because this one looks better. This is the perfect chart. And again, here we are at 50% risk level and having to ask some tough questions as to whether we add risk. And I think since our first session back this year, we've been at 50% on the Nasdaq. And I'm not sure if you've missed a whole lot by just sitting on your hands, to be honest. But for what it's worth, I cannot fault this chart. It is a ripper. I'm very happy with it. Plus R, if you're looking to add risk, hey, I don't know, maybe starting trading today and you've got 50% of your capital to apply. If that's the case, you're not going to do much better than this. I have no doubt. That's a ripper. Let's go to, coincidentally, SNDK. A bit lazy there from Haraju. All he did was just add a letter to his first suggestion. This one I'm less certain on. It's as good as it looks overall. Certainly we can say, we see plus R over there, but I think you would have hung on. You certainly would have kept some risk through here, no doubt. And then would have been plus R here, plus R here, plus R there, plus R there, plus R there, plus R there, plus R there. Oh, plus R there. Breaking even on that one, probably. Or maybe just down a little bit in the last month, but well ahead on everything else. So if you're asking Haraju in terms of you've got it, I think it still equals R. Not adding risk today. I think we know why that last candle is not warranting it. Plus, we're also forming a point of supply here that is, for the record, lower than the point of supply up here. So that is just giving us a little bit of a warning that there is a bit of supply in the market and it is starting to impact price. Upward shadow. Lots of reasons not to go plus R, but apart from just that and that, few reasons to go minus R at this stage. If you were the most nervous person in the world, perhaps you could on the basis of what you see, but that's not me. I'm still looking at that point of demand as sort of close below equals minus R, without a doubt for me there. And depending on the candle, it might be a couple of goes at it, but we won't know till we see it. And we should really bring that to the front. Visual order, bring to front. There you go. And click save. Let's go to your third one, which is Johnson & Johnson, which is fantastic because it's actually come up today. And that is exemplary. I cannot fault it. I don't know what's going to happen next. I always attach that to these ideas. Exemplary there. Cannot fault it. Let's go back to the daily chart and do the annotations. Equals R if you have it, plus R if you don't. You're looking to add risk. Just the perfect low volatility trend. And clearly it's in the basket of stocks globally, right? The few stocks that are being happily bought up by fund managers now. Let's go to Perry's US ones, EVRG. The evaluator growth, I don't know, is it that? EVRG. My fault. EVRG. They've got some great names over there. Oh, brilliant. Let's go to weekly chart just to see if there's anything to worry about. There isn't. I'm liking this even better. I can't fold it. It's the perfect chart. A few black candles here and there, but it's sort of shed that. Looks pretty decisive to me. Look, not terrible volume, bit of volume, bit of supply removal. I want to see that with all these black candles. I want to see them sort of decisively dealt with. But look, there's enough there. A couple of days, a bit above average. Certainly the candles are perfect. So, yep. Equals R if you've got it, plus R if you don't. Looks spot on. Let's go to ATI. Let's do that, undo that, get rid of that. ATI. Oh, even better. Let's go to here. The reason why I like this more, that's why I said even better, is there's fewer of those black candles in there. It just looks more benign. It's just this pervasive excess demand. There's more consensus here to wanting to own it and not wanting to let it go. So very happy with that one. And KMI, the third one from Perry, which looks really good. That's also just broken out through there. Nice long base pattern, and you can see that through here. Yeah, if you measured move, what's that sort of, 17 to 30, 27 to 40-ish, isn't it, on the measured move? So that is looking pretty good. Cannot complain at all. On the contrary, it's very, very strong. Click save. Thank you for those three, Perry. Very good. And also thank you, Haraju, for your three as well. Let's go to Peter, who's got SCOT, which is a TSE stock, Scotty Resources. Not as good as some of the other ones. I mean, it's got the old, it can't be the ice cream sandwich, can it? Which would be two blacks with a white. So I don't know. That's a Vegemite. Let's call that a Vegemite sandwich. And I don't think that'll be in any of the candlestick books because they just wouldn't have Vegemite in them, would they? But there you go. That is literally your Vegemite sandwich there. What does the Vegemite sandwich mean as a technical pattern? It means a bit of a confusion. I mean, you might have heard me call that the zebra. Certainly got itself to the right on Friday. There's a little bit of stuff here, potentially as well. I just think there's a few reasons not to do it. Is that too strong a word? It's not as clear-cut. It's not as clear-cut consensus. Lots of black candles, overlapping price action. It's good. I've no objections if you had some affinity to this one, but for me, look, I can go equals R, but I'm going to withhold the plus R on the basis that I think I've seen stronger setups today. And let's just keep moving. But that's what it is. We'll have a look at them. No harm at all. And I think it helps everybody to compare and contrast. I think this one's stronger than that last one. A little bit of supply there to contend with, but it's doing it well. And I think it did it well on Friday. Not a great day for any of the US stocks, any of the major indices on Friday. And you can see that borne out here on this big pop-up in the RSC. So I think that's very strong. I could go with that. And you can see on the weekly chart, you're getting that volatility. That's my only trepidation. This is much better than the last one in that Scotty Industries had that big sort of major high lurking out the corner there. This one doesn't. So this one's far better, but is it better than some of the other ones we've seen today? And it's very good. Don't get me wrong. It's come back from this very well. So yes, I could go plus R on this one, but again, sort of just saying, well, maybe some of the other ones offer an easier path. But no, this is standalone by itself, deserves the plus R for me. Okay, let's go to Adonis. I think we're going to get to next, if I'm not mistaken. No, Hayden's got, no, Hayden doesn't have any US ones. I don't want to miss anybody, so let me just double check I haven't missed any US ones. No, I haven't. Let's go to Adonis to finish this off. And we're going to go to CVX. Oh, this is good. Great minds think alike. Yes, but maybe not on that last candle. So it's just a matter of keeping it going. You can see we looked at it not that long ago. Let me just go copy paste. That's nice and easy. And put that over there. Oh, plus R. No, I'm going to go equals R. Well, that's what FRP is, isn't it? Let's go plus R on the next demand side candle. Because that's really what we're saying here, isn't it? It's so close to warranting the addition of risk. But we have to agree that Thursday and Friday's candle together are not all that inspiring. Let's just see one little blip back up, and then we'd be happy to have a crack at Chevron NEE, which is NextEra Energy. That looks better. A little bit of upward shadow would have me questioning my urgency tonight. That looks very, very strong there. No complaints on the weekly chart. I'm just looking at $100, and I'm wondering if even that is just a little bit of market psychology coming in. Trepidation at 100. Look, it's not. As long as you can get over that, it's okay. Look, it's better than okay. Just that upward potty shadow. It's going to be like a 9.5 out of 10, isn't it? It's just losing a little bit on that one. But otherwise, no, it's still certainly enough there for plus R. And AZN, maybe I'm being a bit harsh on some of these. That's a yes. AstraZeneca, just checking the weekly chart. Oh, that looks even better. I think this is one you almost have to look at the weekly chart. So it looks a little sketchy there on the daily, doesn't it? Probably because it is actually trading in Europe, and then I think it's being reflected here on it as an ADR. So yes from me. That last candle, I wouldn't say it's inspiring, but it's not enough to dissuade me from doing something like that, because the weekly chart is very strong, and just sort of respecting the fact it's a little bit sketchy. European indices were very strong, weren't they? And that takes us to the end of the list. As I said before, if you have screenshots, are always welcome to let me know if something's. I'm trying to do some movement here to see if there's any weird stuff going on for the new camera, but yeah, let me know. Always happy to have that feedback so I can make improvements. Other than that, ladies and gentlemen, it's been a pleasure chatting with you this evening. Hopefully you enjoyed the session, learned lots, and we'll see you next week. Until then, all the best for your trading. Bye-bye.